Hi, welcome. It's Mary Ellen McGonagle with your Daily 5 for Thursday, March 23rd, 2023. Bit of background for those not familiar. I do have quite a bit of experience working with Wall Street, and in particular was a money manager for over 8 years. I managed over $2 billion in assets. From there, I did move to the West Coast and joined William O'Neill and Company. He's the founder of Investors Business Daily, and it's all about uncovering these big winning stocks that go on to far outpace the markets. During my tenure there, I worked with top money managers throughout the world, and more recently, certainly within the last 7 years, I founded my own investment research firm, MEM Investment Research, which is now powered by Simpler Trading. I'm the author of the MEM Edge Report. I urge you to go to my website and trial that report for a very nominal fee. So let's go ahead and get started. Take a look at the broader markets. And here we are with a daily price chart of the S&P 500, and this is being filmed after the close of the markets on Wednesday, March 22nd. So as we head into today, Thursday, I did want to point out some of the more recent price action on the S&P 500. We did see a rally on Monday and Tuesday of this week, which was quite encouraging. And the S&P did trade at one point above this key area of resistance, this 50-day simple moving average. However, Fed Chair Powell's comments pushed the markets down, and so we were unable to retain that move above resistance. At this point in time, we are now looking for support, and that is going to be at this 10 and then 200-day simple moving average. So not a whole lot in the way of support possibilities here. If we do close below these moving averages, we will look to the mid-March lows as a next area of possible support. But beyond that, you also want to be aware of the momentum. And today's pullback did push this relative strength indicator on the daily chart into negative territory. The stochastics are a bit faster moving. They do remain up here in positive territory, but net, this break or inability to move above that 50-day coupled with negative RSI does have me negative on the near-term prospects for the broader markets. Now, from here, we do need to take a look at the Nasdaq Composite, and quite simply, there is quite a bit more in the way of strength. This index did enter an uptrend last week with a move above each of these shorter-term moving averages. Now, we can see today's pullback did push that RSI down a little, but it does remain up there in positive territory. Stochastics also in positive territory. And then this arrow is marking last week's move into an uptrend as the Nasdaq closed above this 21-day simple moving average. So today's Daily 5 is going to be all about playing into this strength. And it is shorter term in nature as far as the holding time, given the broader, bigger picture. But let's go ahead from here and take a look at some of the bigger industries within the tech-heavy Nasdaq. And then from here, we will take a look at a defensive name as well. So here we are with the daily price chart of the Semiconductor ETF, SOXX. And this is an ETF that you can participate in if you're not inclined to look at individual stocks. But let's take a look at the move here into a newfound uptrend for semiconductors. They truly outperformed here in January, pulled back with the markets, found support here at that 50-day simple moving average. But this week, or on Wednesday, it did close just below this shorter term 5-day simple moving average, but your momentum still in positive territory. Nice bullish MACD crossover into and remaining in positive territory. So with that in mind as your backdrop, let's take a look at an example of a semiconductor stock, a large cap, well-known name that also provides a 2.9% yield. That's not very common for growth stocks to also provide that nice yield. But would am going to share with you here with Broadcom, AVGO, is the move back here on March 2nd. The company came out with their first quarter earnings, and not only were they strong, 23% year-over-year growth, but they were also nicely above estimates, and management guided their fiscal year 2023 revenue higher. So growth prospects going forward. From here, taking a look at the chart, the news pushed the stock out of a base, so a gap up into a base breakout, very bullish. It also turned the momentum indicators into positive territory. MACD already had been up here in positive territory, but it had that nice bullish crossover. Since then, we have seen Broadcom waffle just a bit, certainly with the broader markets. This is the bank fiasco that took place last week. But since then, Broadcom has been able to retain a presence up above this 10-day simple moving average with its momentum in positive territory. From here, let's take a look at another industry group that is a part of the Nasdaq. Of course, it's a part of the broader markets, but I'm highlighting these areas within technology that are heavily weighted within the Nasdaq. And this is the software ETF, IGV. And again, an ETF that can be purchased so that you can participate in the rally taking shape here. I will share with you an individual stock beyond this, but let's take a look at this price action. And again, highlighting that move back into an uptrend here. This is last week on nice volume as it moved back above these shorter term moving averages. Now, we did get a pullback on Wednesday after Fed Chair Powell's comments. So we are going to want to keep an eye on this ETF to make sure that it retains that uptrend. First up is going to be paying attention to that RSI, making sure it remains up above this 50, and then also your MACD. It's not as dynamic as semiconductors. We did have that nice crossover on decent volume, so at the end of the day, it is in positive territory. From here, I'll share with you a stock or one of the certainly better outperformers among software names, and this is Palo Alto, PANW. The company is a software security provider. They do offer network security, which is very important at this time as we continue to have cyber criminals entering or attempting to enter networks of large organizations or even smaller ones as well. So with Palo Alto, same occurrence. Back here, we can see this gap up. It did occur upon the release of the company's earnings, and Palo Alto did report 81% year-over-year earnings growth, 35% above estimates. And you can see since then, it has traded mostly sideways, and really it's not just this gap up that the stock is digesting with this back and fill formation, but a significant move since reversing its downtrend in January. So this is very standard to see this particular name and the group pull back a little bit here. PANW did find support here at that 21-day simple moving average, all the while that RSI remaining in positive territory, MACD as well. Now we're on the lookout for that black line up through the red to signal a new uptrend that is taking shape, because on Tuesday, the stock did break out of a nice 2-week base. So from here, I will go ahead and share with you an area of the markets that I'm going to think you will be aware of because it has been outperforming of late. This is GLD, the SPDR, the S&P's gold shares ETF. And you can see the significant uptrend that took shape here. And this is all about the troubles taking place in a weakened banking system. There has been a flight to quality, and you can see this nice uptrend here, nice on the high volume side because that's indicating accumulation, and then also positive momentum with this RSI above 50 trending higher. We did have that MACD black line up through the red entering into positive territory. GLD does look poised for further upside. From here, I am going to share with you a longer term view of GLD. This is a monthly chart. and perhaps not a lot of people look at this longer term view, but it will give you a longer term outlook for this particular ETF or stock. And for your work, you will want to put a 6-month simple moving average on the monthly chart as your guide. So let's take a look at GLD on the monthly. We can see that it has traded back above this 6-month moving average. Good news there, in line with an RSI that turned positive. And just this week, we did have that MACD crossover, black line up through the red, signaling a new long-term uptrend. And you need only go back to other time periods to recognize when we see these types of convergence with the various momentum indicators that it can in fact foretell a nice lengthy uptrend. I'm going to leave it there. For those of you that haven't already, please use that link below. You can trial my twice weekly MEM Edge report for 4 weeks for a very nominal fee. I do hope you'll take advantage of that offer.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.